What's cooking? Episode 3. Let's talk stocks. I want to share with you guys my strategy for investing in the stock market. Remember, you need to do your own research before investing, and keep in mind I am not a financial advisor. Here we go! Hello everyone, welcome in episode 3 of the What's Cookin' podcast. Happy Wednesday to everyone listening on the day of release. I'm glad to be bringing you guys another consistently scheduled episode like I promised in the first one. We are back and we are ready to go. Hope you guys enjoyed last week's podcast talking about the Chargers. I had a lot of tough experiences over the years. It's not easy being a fan, but I'm going to stick with them. I'm in too deep at this point. We got a bright future, like always. I'm excited. Football season starting soon. We got the preseason games coming up. We just had the Hall of Fame game. Fantasy football's right around the corner. I'm excited, man. Can't wait to get going with all the leagues I'll be in. I was just talking to my roommates today about who I would take number 1 overall. And I had to think about it for a minute, man. I wasn't sure. I wasn't locked in for 100%, but that just shows that there's a lot of great talent in this league, and there's multiple ways you could go with the number 1 pick. But that was last week. This week, we are in the world of finance. We are going to be talking stocks. What is my approach to investing in the stock market? What do I recommend? I've been invested in stocks since 2020. Not a very long time compared to some other people, but I have done a lot of research. I've looked up a lot of stuff on the internet. I've watched some videos, and I definitely have a strategy that I find the most successful, the most fitting to my personality, my lifestyle, I guess. So that's what I'm going to be sharing with you guys today. What do I think is the best for me, and how I can help you guys find what's the best for you. But the very important thing is that you invest early and you invest often. Investing in stocks is an important way to set yourself up for success in the future, and it's really a shame that we don't learn about this much in school. I could probably make a whole separate episode about things that we should learn in school that we don't. I think the priorities of what's taught in school is definitely off. There's so many important things in life that we really have to learn on our own, and the education system doesn't teach us that. You guys have probably heard of the meme. I have graduated high school, or I've graduated college or whatever, and I know that the mitochondria is the powerhouse of the cell, but I don't know how to do my taxes. So one of those things is important in life, and one of those things is most likely not going to be used quite as much, but you have to take it upon yourself during graduation, after graduation, before graduation. You have to take it upon yourself to go learn these things and not be limited by what is taught in school. So I'm going to try to help you guys out, assuming you haven't learned about investing in stocks already. If you have, excellent job. But nonetheless, let's start talking stocks. Before I talk about specifics and some of these strategies you can use and some of the platforms you can use, we need to take a second and we need to be thankful, guys. We need to appreciate the time we're growing up in. Assuming that you're around my age, which is 23, we are very lucky to be growing up at this time where we have so many devices connected to the internet that make things easy for us. Before we had the internet and before we had smartphones where you could invest with the tip of your fingers, people had to call stockbrokers to invest in stocks, and there were very high commission fees back then compared to today. You couldn't really purchase fractional shares. That wasn't really a thing. You had to buy them in like even numbers. So if you wanted to buy Apple stock, you'd be paying over $100. You couldn't just pay for like 0.1 of an Apple stock. So that just wasn't a thing really back then. Today we have that luxury. You couldn't really check the performance of your stocks back in the day as often. You might have the occasional print in the newspaper or some of the quarterly statements put out by companies. But today we are thankful to have all these apps that can track things automatically and immediately for us. You don't have as much research opportunity back then than we do today. You might have to go to a library and read books rather than getting current data and up-to-date information constantly through the internet. And investing through a broker over the phone isn't always as reliable going through them. They could be dishonest with you. They could have some sketchy procedures they're doing. They could be mixing up the numbers and being dishonest. So you're not going to run into that quite as much being on these apps today. And that's just something to keep in mind, that we're very thankful and we're very appreciative of the great opportunity and the great functionality that we have investing with today's technology. So one of the most important things when you're starting your investing journey is deciding what platform or exchange you want to be investing on. This will depend on your investing personality or your investing approach. So the first thing I would recommend for anyone looking to get started is to go on Google and just look up what kind of investor am I quiz. You're going to find a lot of websites that will ask you simple questions like what is your time horizon, what is your risk tolerance, and a bunch of other things that will kind of determine what the best strategy is for you. And what I would recommend is you go take quizzes on a couple different websites just to kind of collect some data from different sources, and then kind of take the average of all the different quizzes you did. You don't have to do a ton. It could be just like 3, but just to kind of make sure that they match up with each other. Some of the possible results would be like long-term investor or growth investor or like conservative, stuff like that. So that's just a good way to kind of see and find out information about yourself that will help you kind of determine the approach you want to take. And then once you have this information, once you know what kind of investor you want to be, I would look up a bunch of different stock investing websites or apps or platforms, exchanges, whatever you want to call it, and start looking at the benefits of each of these, kind of weigh the pros and cons of what people have said. You can look up YouTube videos of a lot of breakdowns that people have posted. So you want to find an investing platform that fits your investing personality. Now, I understand that a lot of you guys are going to have different investing preferences than me, but I do want to share some of the advantages of the way I invest and give you sort of a quick pitch towards why I think the way I invest is very beneficial. If I were you guys, I would consider dedicating at least a small portion of your portfolio towards the approach I'm about to share with you. Doesn't have to be everything, doesn't have to be 100%, but I would recommend you set aside a certain percent towards this strategy. If you are a young investor like myself, then you have one major advantage over people in the age range of 40, 50, and over. And that major advantage is time. So the question becomes, how can we best utilize this time? How can we position ourselves for years and years of growth to be accumulated in our stock portfolio? I would argue that the best way to utilize this time is by investing in dividend-paying stocks. These are stocks that, rather than putting money back into the company to help it grow, they put money back in the pockets of the investors by issuing dividends, usually on a quarterly basis. That means you get them 4 times a year. So you will have a small payment given to you just for holding on to this stock, just for being a partial owner or a full owner of this stock. Now, when you receive this dividend payment, there are 2 things you can do with it. Number 1, you withdraw from the account, you get the money, and you can put it into your savings or checking or whatever you want to do. You can spend it right away if you like. Whatever suits you best. It's your money to use. Number 2, which is my preferred usage of the dividend payments, you reinvest them back into the stocks. Could be the stock that you got the dividend payment from, could be different stocks. But what you're doing in this case is you're receiving the payment from the company and you're feeding it right back in. And what this does is it gives you a larger position in your stocks, which means, say you had one stock before, like one share of a company. This company pays you a small portion of their earnings. So you take that payment and you put it right back into investing in that same stock. So instead, before you had one share, now you maybe have 1.02 shares of this stock. What this does is next time they go to pay you a dividend, it's based on how many shares you own. So if you have 1.02, this means your dividend payment is going to be slightly larger than it was last time. So you get that same dividend payment, you put it right back in, boom, you have a larger position in the stock, pays you a little bit larger in dividends. You keep repeating this cycle, dividend reinvestment, they call it. What this does is it builds up some compound interest. It might not seem super noticeable right away, but the great power of compound interest is it takes effect over a long period of time. This will bring exponential growth. You will notice a huge increase over the long term. And as long as you've picked a very solid, consistent company, this will give you great returns. But listen, you don't have to just take this from me. There was once this one guy who went by the name Albert Einstein. You may have heard of him. Sounded pretty smart from what I've heard. Albert Einstein once described compound interest as the eighth wonder of the world. He who understands it earns it. He who doesn't pays for it. Hopefully that will give my argument some more credibility, or as one of my friends once said, "All right, bro, ethos established." Now, if you remember from earlier, I had you guys on Google looking up what kind of investor am I quiz. Hopefully you still have your internet browser open. I want you guys to look up compound interest calculator. I want you guys to play around with it a little bit, test out some different amounts. This will give you a better understanding of the power of compound interest. Choose some of the longer time horizons, see what kind of effect happens. You should be able to see the curve. Starts out pretty flat, then it turns up, and it keeps on rising, man. Compound interest over the long term, one of the great investing strategies that we have in our weaponry. Now, if there's one thing I've learned from being a Chargers fan, is that things can sound good at first, but when it actually comes down to it, it doesn't perform like we thought. So let me share with you guys how to identify some of the best companies that pay dividends so you can actually experience some compound interest rather than going for it, but somehow it doesn't work out. There are three main things I look at when I'm evaluating a stock to invest in, especially for dividend-paying stocks. You can go a lot more in-depth than just these three metrics, but to keep it simple, I'm just going to stick with these three for you guys. First one is the dividend yield. So let's say you're investing in a company and it has a 4% dividend yield. That means that if you take the company's stock price and you take 4% of that price, that's what you're going to be earning if you hold on to that stock throughout the year. So that is very important. Obviously, it determines how much of a dividend you're earning, but I want to make myself very clear. Do not get caught up in chasing the high dividend yield stocks. This is not the end-all, be-all. This is not the only thing you should factor in. This is just one of several things. Let's talk about the second one. The market cap of a stock is calculated by taking the total outstanding shares of a stock, which is how many stocks are issued, how many have been purchased before. So if I'm running a company and I've had 100 stocks get purchased of my company, that's how many outstanding shares they have. So you take that and you times it by the stock price, and that pretty much just gives a rough estimate of how much the outstanding shares are worth if they were purchased at the current stock price. And this is important because you want to be investing in companies that are well known, usually. They have a strong support from investors. They are proven to give returns over a long period of time. That's very important measuring stick that I like to use. But I would argue that the most important is the third one that I'm going to share, which is the number of consecutive years of dividend increases. And there's a lot of different lists that people come out with to kind of measure the rankings of dividend stocks and how much they have increased their yields over the years. I think there's dividend kings, dividend aristocrats, and a couple other groups that these stocks can fall into. So this means that the stocks that are able to consistently increase the payments they're giving out are going to be added to these lists, and they're going to have more publicity, and they're going to have a stronger support from investors. So you want to identify the stocks that have, over the long term, proven to consistently increase their dividend payments and keep paying time after time, quarter after quarter. You don't want to have a stock you're investing in that's only had a couple months of successful dividend payments, because you really don't know if they're going to be around in a year or two from now. This is very long-term thinking, and we want to look into the history of this company so we know what we're getting ourselves into. So now that I've identified these 3 ways of selecting your dividend-paying stocks, how do you actually go out and find these numbers? Where do you find this information from? The website I would recommend for finding the consecutive years of dividend increases, which is, in my opinion, the most important measurement to select these stocks. There is a website called suredividend.com, S-U-R-E dividend.com. This is a great website, has a lot of lists on there, has a lot of information. I believe if you go to the Sure Dividend Investing Method part of the site, and then you click on the list that they have called Blue Chip Dividend Stocks, there's going to be a link for you to download an Excel sheet that gives you a ton of different information about consecutive years of dividend increases, what's their market cap, what's their dividend yield, all these great points of data that you're able to filter and sort and kind of look through and see which ones you feel most comfortable investing in. Another thing to keep in mind is that the Sure Dividend Excel sheet that you're going to be able to download will break down these stocks by sector. And sector is pretty much what kind of category is this company in. So Apple would be like technology. Coca-Cola and Pepsi are under a category called consumer defensive. Visa and JP Morgan would obviously fall under the finance category or sector. And then you'd have ExxonMobil and Chevron that would be under the energy sector. And the reason behind diversifying these sectors, you want to have a couple dividend stocks from each sector in your portfolio just to kind of mitigate the risk and balance out some of the effects that could happen in the event of one sector experiencing a lot more trouble, pain, turbulence, whatever you want to call it. You'll be better protected if you diversify throughout the sectors. Now, when you're going through and selecting these individual companies that you might want to invest in, you might have some preconceived biases over which companies you're familiar with, which companies you believe in, what do you think is performing well, what could perform well in the future. But the best way to overcome these biases and protect yourself against risk is by investing in ETFs or index funds that have a lot of different companies held within them, and they also pay dividend yields. So this is going to be a collection of a lot of different stocks that are highly regarded. Now, when you do venture out into the world of ETFs and index funds, you're going to have a great amount of diversification with all the stocks included in them, but this comes at a price. There's something called expense ratios, which are pretty much the price you pay for having these stocks bundled up for you and put into one investable option. So you're going to want to make sure you look at the expense ratios of what you're investing in, try to keep it as low as possible so you're not paying more fees. 2, dividend paying ETFs I would recommend for you guys to check out would be VYM, that's Vanguard's high dividend paying ETF, and then also SCHD, that's going to be the Charles Schwab high dividend paying ETF. Both of those are pretty consistent and have proven to pay considerable dividends over a long period of time. If you ever have a stock that you are curious about and you want to check its dividend history, and you don't want to go through the steps of going on Sure Dividend and downloading an Excel sheet and doing all that, there is a great resource. If you just type in the ticker symbol of the stock, followed by dividend history, and if you search this on Google, one of the first couple results should bring you to NASDAQ.com. They have a really nice interface that keeps track of historical dividend payments for a ton of different stocks. So this will show you the dividend yield, annual dividends paid, all the dates that they're going to pay dividends, and then the amounts that they pay. So this is another great resource for you guys. I would recommend just hopping on NASDAQ.com, go into dividend history, kind of throw in a few different stock ticker symbols if you're curious about them. It's a great way to kind of get more familiar with dividend investing. All right, that was a lot of information to take in all at once. Hopefully this will help you guys in your dividend investing journey. You can use all those websites and the online resources I shared to look around, try to find what works for you, build a balanced portfolio of dividend stocks. But the final step is to actually get set up and start investing in these. If you are following my footsteps and going heavy into dividend investing, hopefully you have selected a brokerage that allows you to set up recurring deposits and recurring investments, because this is going to help so much with the strategy I'm about to share, and that is called dollar cost averaging. Instead of trying to time the market, instead of trying to lump sum your way at the right time and hope that you got everything perfectly timed, dollar cost averaging is the principle of putting in money at set intervals, making sure that you are being consistent and choosing an amount that is not too high, and you're able to consistently put in this amount time after time. Could be every day, could be every week, could be twice a month, whatever interval you want to do, as long as it's consistent and as long as it's an amount that you're able to set aside for these investments. Dollar cost averaging has proven to be one of the best performing strategies for investing in dividend stocks and in really any other stock. There are times when lump sum investing and timing the market will work better, but the chances of you doing this consistently over the long term is very, very low, and dollar cost averaging is the more passive way to invest in these dividend paying stocks. You're pretty much admitting that you don't know what will happen in the future with the value of these stocks, so you might as well keep investing on a consistent basis. That way you will be purchasing in the good times and the bad. So that's my pitch for dividend investing, but I do want to mention some other strategies just to give a general overview of what else you could be doing in the stock market. I'll recommend dividend investing every day, but if that's not for you, I'm going to give a quick intro into a couple other popular methods. First one being growth investing. This is pretty much the process of selecting companies you think have a really, really bright future ahead of them. They're going to be a very important part of the future to come. So let's say if you decided to invest in like Tesla 5 or 10 years ago, you're able to identify that this company is doing things that are very significant and will have a great impact in the future. Maybe they're not at that point yet where they're super large, but you think that they have a promising road ahead of them. You can invest a considerable amount of money into these stocks, hoping that their value will increase substantially over time, and then you'll be able to sell once the stock price has accumulated and reached a much higher point than when you got in. That's one method you could do. Unfortunately, that will come with a lot of capital gains tax if you decide to sell all at once. Another strategy that I consider to be very risky is investing in penny stocks. These are stocks that are very, very early stages, just getting off the ground. Hopefully, they're going to be able to make an impact much further down the road. But this is kind of like growth investing on steroids. You're selecting companies that have share prices under $10, sometimes under $5, maybe $1, hence the name penny stock. But this is very, very risky, guys. I would be careful about doing this. There are times when people have made fortunes doing this, but you really got to be lucky. You really got to hit the nail on the head with this one. Very hard to predict, very hard to do this consistently. The last investing method I'm going to mention is day trading. That's when you're looking at charts of the stock movements within a single day, trying to identify some trends that could suggest a potential move that is coming in the next few minutes or hours. I don't have really any experience in this strategy, so I'm not going to be able to share a whole lot of insight to this area, but I do know that it can be very hit or miss. You can instantly win lots of money, and you can instantly lose lots of money. And you very much need to be aware of the risks going into this strategy. So I would invite you to do your own research as always. I am not a financial advisor. Please select the method that will best suit your investing profile, investing needs, investing personality. Again, I want to stress that people around my age have a great opportunity all this time ahead of us. I want to urge you guys to invest in something soon and invest in something that can bring proven returns over time, because the sooner you invest, the more time you'll have to allow this asset to grow and the more money you will receive in the end. So there you have it. That'll conclude my advice for investing in stocks. And now we're going to go ahead and transition over to everyone's favorite part of the podcast. It's time to find out what is cooking in each area that I have outlined in previous episodes, starting off with sports.
What's cooking in sports?
Wow, a lot of action this week to get through. We have no time to waste. Starting off in the NFL, Chicago Bears linebacker Roquan Smith, who they selected in the 2018 draft, has requested a trade from the team. We recently got a hold of a statement written by Roquan talking about how the new front office that was hired from the Bears this year, head coach Matt Eberflus and GM Ryan Poles, do not value him in Chicago. He says that they've refused to negotiate in good faith, and every step of this journey has been take it or leave it. And that's really not the introduction you want to give to your new players, in my opinion. If this is true from Roquan, you want to feel like there's some wiggle room, there's some leeway in your negotiation, trying to gain the respect of each other. But it's really a shame, because Roquan has been a big fan of the Bears growing up, and he said in his note that he looked up to legends like Brian Urlacher and Mike Singletary, who played the same position as him, and he wants to do everything he can to stay and play for the Bears, but he feels disrespected, and he wants to go somewhere where the front office is going to value his opinion and negotiate in good faith. So not good news for either side here. Sounds like he's going to be moving elsewhere. Trades might start coming in. It's really goes to show in the NFL, or really any sport, how important it is to have continuity, because you find yourself in these situations where you have to fire management, bring in new guys. The new guys aren't the people who built the existing team. It was the previous guys. So now the vision isn't going to be there, because the people who constructed it are now gone. You have to bring in new coaches, new GMs who are working with players that they didn't select, and it's just a huge mess. And it's hard to take over in the middle of a situation like this. So these things unfortunately happen, and the Bears are going to have to find a way to hopefully get some value out of this, or salvage the relationship, or move on and figure out where the next step is. On a more funny note in the NFL, we go over to Buffalo, where backup quarterback Case Keenum is going around acting a fool. This man decides to go to the Bills practice with a hat and sunglasses on and starts asking players to autograph the football that he brought. And a lot of them, it's funny, a lot of them did not recognize him at all, even though he's the second string quarterback. He's like on the team. He's been with the guys for a while. The players, most of them anyways, did not recognize him at all. They were like, yeah, sure, I'll sign the football. And then he starts saying some funny comments towards them. And eventually most of them figure out that, oh yeah, that's my second string quarterback, Case Keenum. So you guys got to go on Twitter and look up Case Keenum. You'll probably be able to find the video of him going around being funny. I love seeing this kind of content before the season starts. You can get away with being more lighthearted. Probably won't see this as much during the season, but you gotta keep things lighthearted, man. You gotta go joke around. It's how you build chemistry with the team. It's a good way of having fun. You gotta give it to Case Keenum. Great move by him. Now we're going to head over to Denver, where the Broncos ownership has recently changed, and that's a big deal because this doesn't happen very often in the NFL. The former owner of the Broncos, Pat Bowlen, passed away in 2019. and his children were deciding what to do with the team. They decided to put it up for sale, and there's an ownership group led by Rob Walton. He led this group who just recently had their purchase approved by the NFL to take over the Broncos, and they acquired it for $4.65 billion. Sheesh! I don't know about that, man. That is a ton of money. Hopefully they can do some good things with the Broncos. Big investment there. You got to make sure you know what you're doing. But listen to this. Rob Walton was the son of the Walmart founder, Sam Walton. So obviously a lot of money in that family. They also, in this ownership group that just purchased this team, they also have Condoleezza Rice, who was a former Secretary of State. And if you guys remember, she is also a big Cleveland Browns fan, which is interesting because we've seen this before. And this reminds me of Dwayne Wade getting involved in the management for the Utah Jazz, even though he's like a Miami Heat guy all the way through. He's getting involved with the Utah Jazz ownership. We're seeing Condoleezza Rice, huge Browns fan, now being involved with a different team's ownership. I don't know if I could do that, guys. I don't know if I could go, and not that I'll ever have this situation in the first place, but I don't know. My loyalty would make me second guess that decision, but I suppose you put that aside if you're given that great of an opportunity. But I will say that it was interesting that a couple of years back when Condoleezza Rice was actually offered by the Browns for a head coaching interview, and that was like a huge deal because she was only like a fan of the Browns, and they were looking for a coach, and she hadn't had any coaching experience before, and I was really interested into that situation, but she turned it down. She said she didn't want to be a coach, so interesting little nugget of information there. Also in this ownership group is Lewis Hamilton. He's a 7-time Formula One champion, so pretty cool, diverse group there, a lot of different people, a lot of different viewpoints. Denver Broncos under new management. We'll see how it goes for them. Meanwhile, in the NBA, the most newsworthy team over the past few years, the Brooklyn Nets, of course, always making headlines. Not always winning games, but they're always making headlines. Kevin Durant told the Nets owner that they can either keep him or they can keep the combination of Steve Nash and their GM, Sean Marks. He's giving him an ultimatum, guys. You either keep me and send them packing, or I'm out of here. And that is big. If you guys remember in episode 1, I made the prediction that KD will move to a different team before the season starts. That's looking a little more possible here, guys. That's the direction that we're going right now. And it was the same day that this happened where KD gave the team the ultimatum. On the same day, it came out that Ben Simmons was in a group chat with other Brooklyn Nets players, and this was back in the playoffs in the first round. They were playing the Celtics. They were going into Game 4, and Ben Simmons' availability was in question at this point. They didn't know if he was going to be ready to play. The teammates of Ben Simmons on the Nets texted in the group chat asking if Ben was going to be able to suit up and play in Game 4. And Ben just straight up left the group chat. He didn't respond. He didn't give any sort of indication. My man just said, "See ya, I'm out of here." Allegedly, of course. We don't have any hard evidence of this, but if that is true, man, that is a bad sign. You wanna have better confidence in the former number 1 overall pick that he's gonna want to put his body on the line and play for the team in the playoffs in an elimination game. And you're just not getting a lot of response out of him lately. A lot of confusion and antics and all this stuff. Not looking good for the Nets with Ben Simmons. They might lose KD. They could lose Kyrie. It's just a circus going on there. I don't expect them to make the playoffs this year, even though they are in the East, which is easier in my opinion. But that is just a circus if I've ever seen one. Some news coming out of the world of tennis today. Serena Williams announcing that she will be retiring after playing in the U.S. Open. This is big, guys. Serena has been dominant for so many years. She's deciding to have another baby soon, and she's going to put more focus on her family, pursue some entrepreneurial opportunities, and kind of transition into the life after tennis. So huge congrats to her. That's big. She's had so much success over her career, obviously. You guys are pretty familiar with the name Serena Williams on and off the court. Huge congrats. The sport is going to miss her a ton. Hopefully we have some new young and upcoming stars that can replace her in the future. But big shoes to fill.
What's cooking in finance?
It is a bad day to be a crypto lending, interest-paying platform. We saw this happen with Celsius. We saw this happen with Vald. Now it's going to be Hodlnaut, the third platform in recent months to be struck down, to go ahead and pause their withdrawals. Man, if you had money on there, I'm sorry, but it's gone. It's most likely not coming back. Initially, when you hear this news, it seems like a bad thing. And at first, it really is a bad thing. But I think long term, this could be good. This could be good for the state of crypto going forward. We do need some sort of natural selection to come through, give us a little cleanse of these crypto platforms, kind of weed out the ones that aren't going to make it, and strengthen those that are positioned well to last. And if you're a historian of finance, you might have been able to see this coming, because I'm getting eerily similar vibes to the dot-com bubble of the late 90s and the early 2000s. Similar to the state of crypto right now, we have this technology that's coming out that's emerging. It's very new. We know that it's going to be a big player in the future, but we don't know how soon it's going to be viable and adopted. So what we're seeing in both of these situations is a lot of money flowing in, a lot of projects being created. You got the crypto name attached to it. You put anything with coin on the end, and automatically you associate yourself with crypto, and people like the idea of crypto, so they'll put in money and you see where it goes, but you really haven't established yourself yet. You haven't made profit. You don't have a viable business at this point, or coin or currency. Going back to the late 90s with the dot-com bubble, people were associating themselves with the internet. They were putting .com at the end of their company names. People really liked the idea of .com and the internet. It's going to be the next big thing, which they were right. The only part they were wrong about is which businesses they are investing in. You can't just slap a .com or slap a coin onto your product and pretend that you're fully immersed in the space. You're not going to be able to get away with that long term. And we saw that in late 90s. A lot of IPOs, a lot of stock offerings got huge hype in the beginning. Then we saw some turbulence and they all came crashing down, and only the strong remain. So I think that this will be very similar. We're going to have some sort of cleanse going through right now. Who knows if this is the true bottom or if we have lower left to go. But this is a long term. This is necessary, I believe. We're going to come out of this stronger. We're going to come out of this better. The best projects will survive, and we will move forward with the technology, eventually arriving at a point where it's ready to be fully adopted and used. Not this year, probably not next year, but in the future to come. Cryptocurrency, NFTs, blockchain, Web3 will be here to stay, and it will be a huge player in finance and in technology going forward.
What's cooking in technology?
This is a landmark accomplishment in the field of technology and also the medical field. So listen up for this crazy story. There were two conjoined twins born in Brazil. They needed surgery. They needed to be separated if possible. The medical experts they were going to were telling teams in Brazil that the separation surgery that they were asking for is impossible. They were looking around, exploring different options, and then in a last-ditch effort, they reached out to a company called Gemini Untwined. And Gemini Untwined came in and offered some guidance. What they did is they took a CT scan and an MRI scan of the twins, and they used that to help build a virtual reality model of the twins. So they're using VR to kind of build a replica of their situation and like how they're attached at the head and what's going on and everywhere. So what they did is they have this VR model. They spent months using the VR technology to practice the operation that they were going to do on these twins. going through using VR, not on the real actual conjoined twins, but in this virtual space. They're able to go through and see things, practice, see what'll work, see what's going to cause problems. After months and months of practicing, they went in, they did the operation. It was a success. There was 100 clinicians involved, and it took 7 surgeries overall. But man, the VR came in clutch. It helped them practice. They successfully separated these twins, and that is a huge milestone in technology and in the field of medicine. Love to see it. Hopefully, we're going to have more developments in this space and help save lives and improve well-being everywhere with this great technology.
What's cooking in video games?
I had no idea this was a thing until today. Netflix has gotten themselves involved in the world of video games. As we all know, Netflix has been struggling recently. Since the beginning of this year, they have lost about 1.2 million subscribers. Holy moly. They've had downward trending numbers. They've cut jobs. They've slashed spending. They've canceled shows. If you look at the Netflix stock year to date, it's down over 60%. Not a good situation to be in. They're deciding that they want to go into the video game space. They have released over 25 mobile games that you can download through the Netflix app. These games are all ad-free, and they don't have any microtransactions. That's very good because I am not a fan of microtransactions. And I guess what their idea is Netflix COO Greg Peters was telling investors that they plan on being experimental in this space, and they're going to try a bunch of things. And supposedly one of these things is making mobile video games related to Netflix shows that they have. So I think that they mentioned that there's a Stranger Things game you could play. A couple other games that are related to TV shows or series or movies. That could be cool. That could be fun. If you're a big fan of a series, you could play the game. Supposedly, it hasn't been a big success yet. Not a lot of engagement about these games. I had no idea that these even existed. I'm a Netflix user sometimes. I'm curious to know if you guys use Netflix. Were you aware that they're offering mobile games or they're offering video games? Let me know in the DMs on social media. I'd be very surprised if anyone DMs me saying yes, that they've played the Netflix mobile video games. I might take a look at them. I do very much like Stranger Things. I've seen the whole series. That could be fun if I could go around playing as Eleven and making things happen with her powers, or my personal favorite character, Dustin. Honestly, I'm tempted to download the game right now just to see if Dustin is a playable character because of how much a legend he is. I would definitely hop on and play as him. Maybe get a little Eddie Munson guitar solo going, a little Metallica action. Whoo-wee! I'll tell you what, man. Netflix, you might be onto something here. The more I talk to myself into it, the more I feel like I need to go get this. But I don't think many other people feel the same way according to their numbers, but we'll give it time. We'll see how they do. Netflix in a down period right now, but very large company, very successful in the past. I bet they can right the ship eventually. Might not be this year, but they have a lot of things going well for them overall. So we'll see how it goes. Guys, that's the end of What's Cooking, episode 3. Thanks for tuning in. Unfortunately, I was planning on having a guest join the show for next week. It sounds like that's not going to be possible. So you might be listening to me one more time, see if we can get it going for 2 weeks from now. It's just a matter of logistics, getting the right people and the right situation lined up to have them come on, but I'm confident we'll get it going soon. I think I'm going to have more fun when I'm talking to other people. Hopefully it'll lead to a much more engaging conversation and entertaining content for you guys. Once again, I'm planning on releasing an episode every Wednesday, so make sure you check back in on Wednesdays. What's Cooking Podcast, episode 3 is in the books. Follow me on social media at what's_cooking. Tell your friends to listen to the show if you think they'd be interested. And we will see you next week. Have a good one.